All right, gang. Well, thanks to everybody for joining us. Let me just set the groundwork for kind of what led us to here today. Is many of you are aware of, we filled out a Google sheet about all the people that were joining. And one of the things I did is I looked at kind of what talents or strengths do you bring that could be shared with the community. And I was aware that Naiching was a CPA and had also organized some tax structures for himself. Meanwhile, Goldie had been asking me, "Hey, do you know anybody who does this?" Because I'm kind of looking into it. So initially we thought, well, we'll just have like a small group. And I thought, well, why don't we just open it up to the rest of the community? If you have specific questions, Naiching can take them. Um, and we'll just kind of see how long this lasts. I have committed to my wife that I'll go have pizza at 5 o'clock. So if you guys continue over an hour, then I'll probably just say I'm going to turn it over to you. You stay as long as you like, and then I'll exit about 5 o'clock. Does that sound good to everybody? Thumbs up?
Yep. Yes.
That's
Okay.
cool.
Sounds good to me. Just one
Sounds
quick
good.
follow up. So I'm not a CPA, but I do run a trading business. So I have experience to share, but I won't be able to provide you any tax advice or anything like that.
Oh, okay. I may have, I read a lot of profiles and going off of initials and things, I might have confused it with somebody else in our group that was a CPA. So sorry if I misunderstood that.
No problem. Yeah.
All right. So maybe Naiching kind of give us a background, kind of what you do and how you trade. And then from there, we'll maybe just do a open Q&A.
Yeah, sure. So I used to be a software engineer and I work for a proprietary trading firm. So I learned some trading knowledge from while working there. And so then I'm interested in finance in general. So after leaving the company, I worked for a few other tech companies, but I've been still interested in trading and finance. So then someday I just think, maybe I should just start my own business and try it out and to see how it works. And then I kind of slowly transitioning into kind of the running as a business because at first I just did some kind of personal trading while still working for a W-2 job and then gain experience and learn a lot more from different groups, including there was wonderful trade div group and yeah. And so my trading, I mean, I incorporate different types of styles. For example, I know MEIC. I also do some other kind of trend following trading style. I tried a few different things, but right now I'm kind of stick to option trading in general. And I've been thinking about trying out the Ironfly that Dale has been doing. I just never had a like good amount of time to participate because I know it's a more like time commitment for this activity. But hopefully I can someday join the group and trade with everyone because as I think Dale mentioned this in a different interview that trading can be lonely because sometimes you have to face your losses. I mean, of course, gain, everyone is happy, you can be alone, but when you face losses, sometimes you do want to kind of share the experience and what might have gone wrong, what could have been better, and that kind of things. And of course, when we have gains, we also want to celebrate, So yeah, so I think that, I think Dale mentioned that it's a kind of a group therapy. I feel like that's something I would like to join. So
Well,
hopefully I'll be able to do that.
well,
Yeah.
let me ask you the first question.
Sure.
It sounds like you've kind of gone through the process, maybe examined different tax structures for yourself.
Right.
Where did you land, and what kind of structure did you set up for yourself?
Yeah, so that's a very good question. So the first question we usually encounter is that the kind of company structure. So what we have right now is an S corp. So LLC and elected as an S corp with IRS.
Okay.
Yeah.
So you
So
have an S corp, and underneath that you have an LLC.
Right. Or
Okay.
that's an LLC, but you can choose to elect as an S corp with IRS. So
Okay.
IRS will treat you as an S corp, but at least for my state, I mean Washington State, so the state will consider you as an LLC.
Okay. So your state
This is one
considers you an
company, right?
LLC.
Sorry, you're talking about one company. You're not talking about embedding LLCs, right?
Just one
It's just
company.
one LLC that's an S corp.
Yes.
Okay.
Yeah.
Okay. And I assume that you also looked at different structures before you landed on that one. Is
Right.
that a
Also, do you want me to go kind of through my reason of choosing this
yeah,
structure?
maybe like pros and cons and why you selected that structure.
Yeah, of course. So there are, I'll just briefly go through the options, not all of them, but just some popular options. So the first one is, of course, sole proprietorship. And then the next level, you can go with the partnership, just kind of the default LLC, or you can go to a S Corp or even a C Corp. And so they all have different pros and cons. So for a sole proprietorship, that's probably the easiest. You don't really need to do any you don't need to apply anything. You're just doing business by yourself. So the downside is really that when you have to trade your trading gain and losses, you put that kind of into your personal tax. And as far as I know, that usually triggers more audits because you are going to claim a lot of losses in one form while your gains will be in a different form. I
Right.
think it's Schedule C and Schedule D. So, when you ha claim a lot of losses and try to offset your gains, then it's usually the red flag in IRS eyes.
And
So,
are you talking about for a sole proprietor when you're
yes,
talking about
yes,
that?
yeah.
And then you haven't talked about like registering as a profession. Is it what's it called? The designation Goldie, is it a professional trader?
TTS. What does
Yeah.
it stand for?
So
Trader,
there's a trader
trader tax
tax
status.
status.
Okay,
Mhm.
Yeah,
TTS.
yeah.
And would you classify that as a subset of sole proprietor, or is that like a third, another category?
So it's actually another sort of category because it's not about the structure of your company, it's a status. So
Ah, okay.
you have to achieve that status in order to claim that you're running a trading business, either running as a sole proprietorship or running as a company.
Okay, so that's a status, and the other things you're talking about is a structure.
Right, right. So
Okay, gotcha.
these two are different things. So even if you run a company, you still need to have that status because with that status, you then have a lot of so you so you are treated as running a trading business. If you don't have that status, you are basically just running an investment company, which is different. So because if you're running as a trading company and you have this trader status, then you are allowed to have a lot of tax deduction because this is part of your business. You're running a trading business. So, for example, if you subscribe to any chat room, like if you subscribe to using
You know,
different tools, travel, etc.
subscribe to a high dollar room like Trade Diff Discord and Zoom Link, stuff like
Yes,
that.
yeah, that would be deductible because that's part of your trading business.
Okay,
But you're just in.
Goldie, your price of admission just went up.
I know.
Yeah. So yeah, so that's a different thing other than the company structure. So that's kind of the good and bad thing.
Yep.
Yeah. So next level, if you have a company, then of course I know people talk about like LLC, you can protect your property. If you have money in that, you can protect, for example, if you set aside money in your trading company, then if you owe debt to other people, they won't be able to get money from your trading company per se.
Okay.
Yeah, so that's a different that's not really related to trading itself, but for trading itself, for example, if you want to go up to S corp or that corporation level, there are two different kind of benefits. For example, if you're just doing LLC, the default option is partnership. So for partnership, the good thing about it is that your gain is trading gain. So you don't have to pay a self-employment tax. So you basically just get the gain, and then because it's a pass-through entity, so you just basically get the money from the company, and your company can deduct all kinds of expenses if you have the trader tax status. But there's pros, there's trade-off here because because for example, for myself, I want to do the 401k contribution so that I can sort of convert the money into the Roth. So
Are
that's it.
you, is your company just you or is there other people involved?
Me and my wife. So it's
You and your wife.
basically, so we have solos 401k basically.
And
So
is
if
that
we
why you did the S corp to
what?
for the 401k?
Yes. Yeah.
Okay.
Yeah. So when we have trading gain, we can decide if we want to go do that through the salary. If we do that through the salary, then we kind of convert that trading gain, a capital gain to earned income. Since we have earned income, we'll be able to contribute to 401k, IRA, all that kind of accounts. But with
Right. And that's
trading,
because
yeah,
trading income is not earned income, which, in case anyone doesn't know that.
yeah, that's
Uh,
correct. Yeah.
And your employer doesn't provide 401k, Naicheng?
Well, you can have multiple 401k actually. So you can actually, I mean, your contribution is limited to, I think it's 24,000 this year. But, as an employer, you can actually contribute more because I think 2025, the maximum for one 401k is 70,000.
Did you
Yeah, that's
s-
yes, yeah.
did you set up the structure yourself, or did you have somebody else help you?
Uh, I had some help, but then I realized that help wasn't really necessary and it cost extra money. So yeah.
Yeah. Okay.
Yeah, because usually, I think for most states, you just go to, I think as Secretary of State, and you register your company, you give it a name and your address, and
Yeah.
basically you just fill out some basic information, and then you have to do the annual reporting and so on. And I mean, of course, if someone helps you, you still have to do all the things annually anyway.
Right.
So, and they'll charge you extra. So I would not recommend that unless your state requires a lot of things. But
You know,
for
I
my pretty
I,
strict.
I have found ChatGPT very helpful. And in fact, if I was going to establish a structure, what I might try to do is do most of the paperwork myself, and then maybe hire some body for an hour or two to sit down with me and review my information.
Mm.
Have you are you familiar with like the way hedge funds set up a lot of them, limited partners and general partners? And does that impact tax structure? Or
I'm not
is that
familiar
another topic? Okay.
with that. That's actually a different topic, and I think
Yeah.
depending on how you set up the hedge fund, you might need to have some licenses.
Yeah.
So that's yeah. So
That's
that's
another topic.
yeah.
All right. Well, what questions do you guys have?
who do you use for payroll,
I use paychecks.
paychecks?
Yeah. And
And what
I
percentage?
heard Gustav is also pretty good.
Yeah, Gusto. Yeah. What so you pay you and your wife a salary,
Right.
and and then the rest is left in the company. Like what kind of percentage salary compared to income are you paying yourself, or whatever you're willing to share? I just the
Um,
salary thing, coming up with the salary is really interesting to me.
right. So, for S Corp, you can take money out of the company in two ways. One is through salary, one is through sort of dividends. You can basically just take out the money. It's called like distribution, basically. So for IRS view, you since you said S Corp, if you do work for the S Corp, you're supposed to take as a salary. So there's some advice saying like 70% should go through salary, and because but in IRS website what they're saying is actually a reasonable compensation. So some advice is that, you think about your job and then how much you will be paid in the market, like market price, basically. So for us, we basically try to max out the 401k, the money if possible. Sometimes we won't be able to make as much, but if we are able to make that much money, we try to max out the 401k limit.
So that
So
means maxing
that's
out your
for two.
salary.
Yeah, so for two people in 2025, it will be $140,000. That's yeah.
You,
This is
you,
on top of your employer contribution, correct, Nigel?
Yes.
Okay.
you mind if I ask you how old you are, Aiching?
I'm about 40.
Okay.
Yeah.
Because one of the things I think that this, uh, from tax purposes, may change as a person gets closer and closer to retirement.
Right.
Um, Depending upon kind of where you are in your total contribution and the size of that, because you'll also be balancing what your required minimal distribution will be at 75 years old. And since we're kind of talking general about traders and tax, you might consider as you project the value of your uh, taxable fund to the age of 75, and then guess at what your minimum required distribution will be compared to your, current tax obligation, if
Yeah,
that
and
makes sense.
yeah, another option is you can go at least some portion to Roth, which doesn't
Yeah.
have minimum distribution requirement.
Yeah, Roth does not have a minimum distribution requirement. I think the maximum you can put into a Roth is $8,000 a year from earned income. And then after that, you could do an IRA conversion, and you'd be converting it at your normal tax rate that would then go into the Roth. So that's something I've looked into, and and converting a portion of mine. My goal would be over the next 10 years to convert a certain amount every year into a Roth.
Yeah. So another thing I would like to share is because we kind of set up the 401k by ourselves, of course, we work with another company. So just based on the kind of the documentation, we are able to make a backdoor Roth. So you will be able, if you take salary out of the S Corp, you will be able to contribute a lot more to Roth. So that's another option there.
So
Yeah.
in essence, a backdoor Roth is like moving it into a 401k, but immediately paying taxes then on that and moving it back into the Roth from your 401k. Is that a good description?
So it's slightly different. So the mega version is that you can actually contribute after-tax money to your 401k. So for example, if I get 70,000 salary, then I'll be able to contribute that as a after-tax money into my 401k bucket and immediately convert that 70,000 to my Roth IRA.
So you would get the tax benefit, but then you're also paying taxes on it from the conversion. Is that right?
So no, there's no. I mean, since we assume we can convert it immediately, then there's no tax over there because the salary already pay the payroll tax and social
Oh,
security.
you've already, so you're just bypassing the normal deduction you would get from putting it into the IRA.
Yes, basically.
Yeah,
So
yeah,
because it's always already after tax money, so you can kind of convert to Roth. So kind
yeah.
of bypass that 8,000 per year, and also because there's also a salary limit, right? The income limit you can contribute to Roth.
Okay.
I mean, of course, you can do backdoor. You just put that into a traditional and then convert that to Roth, but that's a
Yeah.
different. Yeah.
So really, so since Tai Ching said it's like not tax advice, it's just his experience of creating tax structures. So that's kind of that gives us another box to operate within. So given that, what questions do you guys have?
So Naiching,
Uh,
you
go
spoke
ahead.
about the backdoor Roth, right? So if I already have an existing IRA, and it, let's say, I contributed 20,000, now it is sitting at 200,000, approximate numbers, okay? Can I still do the backdoor Roth?
So there are two different types of backdoor. One is the mega version, the other is the regular backdoor. So the regular backdoor is that you contribute because of the income limit, you won't be able to contribute to Roth directly,
Right,
right?
right.
So
Yeah.
you contribute to traditional IRA first, and then immediately convert that to your Roth. So let's say 7,000 this year go into your traditional IRA, and then the same day or when the fund is available, you immediately transfer to your Roth IRA, assuming there's nothing in your traditional IRA. Just
Yeah,
yeah,
that's what I'm saying, right? I already have contributed 20,000 like 10 years ago. Now it is sitting at 200,000. So there is a growth of 180K already happened. So if I contribute 7,000 now it will become like, you contributed 27,000 total, but your total sitting is 207,000. So when I transfer only 7,000, this is what I understood or read from the tax codes that you have to see how much you really contributed to traditional IRA and how much you are converting, like a percentage basis.
right.
So that's why you have to pay a little bit extra tax on that. That's what I understood. That's
Uh,
why we cannot do a complete conversion. That's what I
yeah.
thought
So
he said.
because you already have money in your traditional IRA, that's what you're
Right,
saying. So you,
right. Yeah.
as a pro rata rule, you need to be aware. That's why you mentioned that you have to pay tax in proportion because
Okay. Yeah, makes sense.
so
Okay.
so if you have your own 401k, there is something that might be helpful with your situation. So
Yeah,
first
yeah.
step is you can roll your money in your traditional IRA to a pre-tax account in your, for example, solo 401k.
Okay.
And then everything in your traditional IRA will be zero, right? You can
Right,
roll over all the money because it's across account.
right.
Yeah,
Yeah. Okay.
so let's assume you have a clean traditional IRA. Then you will be able to do the uh, backdoor with a
Without any.
clean
Okay.
slate. Yeah.
Yeah. Okay.
Mhm.
Makes sense.
But that requires you having a 401k that you can control.
Yes, the solo 401k somehow.
So
And
that's about the back door, but then
Right.
there's just normal conversions. I think to take anything out of your IRA, there are some age requirements apart from any kind of category that you might fall in around hardship.
Right.
I think at 62 or 62 and a half, if you make regular withdrawals from an IRA every year, the same amount before you turn, uh, yeah, I think it's maybe there's some age where you can start taking money out of your IRA if it's a regular interval. And then I think starting at 62, it doesn't matter. You can take it out anytime that you want, but you will pay taxes on your normal, whatever your tax bracket is.
Mhm.
You can convert that money from your SEP IRA or IRA into a Roth, but you have to pay taxable income on that based upon your tax bracket.
Yeah,
yeah,
but I just want to mention that that's different from the Mega Roth. Just want to be clear. Yeah. Because Mega Roth is a different route. Yeah.
Mm. Mega Roth, is that where people have like put entire companies into their Roth? Like they've invested in Netflix when it was, just
Yeah.
starting and they put that into their Roth and now all of a sudden they're a
So
billionaire, but it's all in their Roth.
yeah, so technically you can do that with your own Roth IRA, but there are just a few more nuances you have to be careful about. Yeah.
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 Yeah, those are the folks that are making out like a bandit with tax-free income.
Yeah.
So what other questions do you guys have?
Do you do your own taxes?
What?
Do
Do you
you
do your own taxes or do you
Yeah, I do my own taxes. Yeah. But for the company, I do have a like a working CPA. Yeah. But yeah, I'm thinking about doing that myself as well. But
Do you use any off-the-shelf softwares to help you?
yes, yeah. I use the I think it used to be a Credit Karma. They have a free version, which I think is already pretty good. And I think they sold it to Cash App. So you can do that for free for you with
Did you
one state. So
credit credit comma or karma?
With the
Karma,
K,
Karma.
Okay. Okay.
Yeah, Karma.
they give you your credit score, they monitor all the accounts, it's a free of cost.
Yeah,
Okay.
yeah.
Yeah, Naiching, one question. You mentioned about S Corp taking a salary out, right? I mean, if I don't want to take a salary, whatever the amount that S Corp made in a year, that becomes like your income, right? It's like a passover, right? After taking
Can't
all the
do it without
deductions.
taking a salary. You have to take a salary, or you don't want to do an S corp then.
Yeah.
Okay, okay, okay. So maybe I was confusing with LLC probably. LLC doesn't have a requirement, I think, right?
Right.
Yeah.
So LLCs is just a pass-through income.
That's correct. Yeah, I mean they are all path through entities. So yeah, if you take salary, it becomes your salary, but then the salary you took will become your business expenses. Then you kind of deduct that. I mean, so the net is you have to pay payroll taxes. So for us is that we have to wait if we want to pay payroll taxes and but with the money after tax money will be in Roth, or you want to take your capital gain and just pay normal tax. Yeah.
So with an S corp, I would assume the corporation would pay half of your self-employment tax. You personally would pay the other half of the self-employment tax, just like it would work in a company.
Yes, basically. Yeah. I mean, it's end of the day, it's all our money anyway. So
Yeah.
Yeah. So one other question. Let's just assume, you make half a million or plus just with the trading income, right? I'm just like randomly throwing. What would you suggest in a situation like this?
can you say that again?
So
Sorry.
Which structure? He's saying, let's say you made $500,000
Mhm.
as a trader. What structure would you, based on that information, would you suggest?
Okay. So I would say if you anticipate that you can continue make a good fortune, then I think I would still do like S corp because for with your partner you'll be able to kind of convert 140,000 to Roth, which will be tax free forever. But since you can make so much money based on whatever strategy you have, what and because then I think and because and it's the limit is by year, so you need to do that as early as possible. But yeah, so that will if I were you, I would do that. So
Okay.
Is there a certain cutoff? Like, do you have a mental model yourself? Like, X amount you'd stay with sole proprietor, X amount you would kind of develop an LLC, next level. Do you have like breaking points there for kind of what the size of a trader that you are and which structure you would pick?
okay. So in general, I would prefer just having a separate entity
Mhm.
because as I mentioned that,
So
the
regardless of the size of a trader you are, you prefer, a specialized entity.
I would say so if you are serious about like creating a business, if you're just running, for example, you're running for fun, like 10,000 and below, it's probably okay just put it in a sole proprietorship because, that's not a big number, I would say. But if you're serious about it and you work hard on that, you want to get the tax deduction, right? So you want to get the trader tax status. So all your expenses, for example, you can set up a like home office like we have a specific place. We buy laptops, monitors in it, and all that will be tax business expenses. And so, yeah.
Well, in terms of it's been my experience that the maximum we can deduct in terms of losses is $3,000 a year from earned income, and any other losses are carried over expenses. But does that change in
Wait.
a structure?
There's no earned income.
No. But let's say I'm just a sole proprietor. The
Hmm.
maximum I can deduct from my earned income in any given year is $3,000.
Yeah. So
Okay. You mean
All
the income earned?
all
Because
yeah against
okay.
earned income.
right.
Okay,
All right.
so let's say I make $100,000 for my job and I lose $30,000 in trading. The most I could deduct in 1 year is $3,000. So now my salary is 100 minus 3, it's 97,000. The other 27,000 carries over into the next year until eventually that gets washed out. So that's kind of as a sole proprietor. But if you're doing, does that change at all um, as you file with an S corp or C corp?
What makes a difference is trader tax status. So if you have that status, then you are running a business. It doesn't matter if you're running as a sole proprietorship or S corp or other entities. So if you have so you trade like a business, then you will be able to deduct that $30,000 as business expenses. So then your income will become $70,000. So that's one of the benefits of running as a business or running.
Are there any changes to wash sale rules for trading within an S corp or C corp?
No, but if you have the trader tax status, you are entitled to do a mark-to-market election.
Okay,
So with that election, you don't have wash sale for equity. So for futures and indices, they they are already marked to market anyway.
gotcha. Okay,
Yeah. But for
well, good.
stocks, you can avoid the
Wait,
wash sale stuff.
Yep.
that's a
All right.
good one.
What other questions do you guys have?
Wait, can we just stay on mark to market for a second?
Sure,
Because
sure.
it's really confusing. So
Right.
mark to market, if you have, from what I know, and from what I know is what ChatGPT told me, when you do mark to market, uh, you lose SPX. If you declare mark to market for SPX, then although you can take unlimited losses for a year, you can't do the 60/40 tax treatment.
So it's
So
one or the other.
what I've heard, yeah, what I've heard is if when you declare a regular mark to market, that is for your equities and all that, but not for your futures and your SPXs and anything that has 60/40, special tax treatment. What do you do in are you mark to market? And if so, how does that affect are your SPX options also mark to market?
Yeah, so you get to decide because they are in different categories, basically. So you can, because you can do the election with IRS. So you can just elect a category. So in general, you only elect for equity
Hmm.
to because you have to be careful about the wash sale and everything in equity, right? So in general, or at least for us, we choose to elect mark to market with equity only. As for SPX and for other future like ES, then it's still they're still capital gain. So since they are still capital gain, you get to have the 60/40. Uh, yeah. But for mark to
Okay, great.
market, as you mentioned, yes, that everything you don't have that, but you don't have that with equity anyway. So
There's some folks that have put things into chat. Adrian says this is not structure related, but I would suggest everyone read the book Capital Gains, Minimal Taxes, The Essential Guide for Investors and Traders. And he put that in the chat. Mike Jackson says 1256 trades, losses can be moved between years. Mark to market 475 election needs to be filed by April 15th. So good information. And
yeah.
What other
Yeah,
questions do
we
you
just
guys have?
one thing to share that we actually did have the carryover because because we had a loss in 2022. So but we have a gain in 2021, a lot more gain. So we actually can carry over our losses back to offset the 2021 gain. So that's one of the benefits of the 1256 contracts. Yeah.
Other questions?
Definitely. Sorry, just going through my notes. Uh, well, I just wanted to also point out that even if you are if you have trader's tax status under a sole proprietor, you still get can get audited even more than a regular person, a sole proprietor. So making LLC is even more important if you're TTS. Um, do you do QBI deductions at all? Is that applicable to this?
That isn't applicable to us, but that's something you will be able to claim. Yeah.
Okay.
Yeah.
All right, other questions? Um, Mike Jackson says broker issues if trading in company account. Uh, and I assume that you're asking that, Mike, because there are some brokers that ask, well, all brokers ask, are you a professional trader? And I think if you answer yes to that, then there's a whole nother category. Sometimes you have to pay for real-time data. Sometimes there's other costs or different pricing structure for trades. Um, so I guess the question, and I'll
Software
throw
like
that to the group, are you aware of if you file as a C Corp or S Corp, do you have to list yourself as a professional trader when they ask the question with your broker?
yes. Yeah, so we did list as a professional basically if you apply because when you apply a trading account under the company, they will ask you to submit a documentation and like a formation, company formation information. And so once you do that, you are basically default a professional
So
user.
did that change any of your fees and commissions?
Commissions, no, but fees, yes. So
Uh,
basically the data fees. Our main broker is IBKR.
Okay.
Yeah, we also check others. Others basically have the same rules. And I think for Tasty Trade, they if you're an S Corp, you and just you run with by yourself, then I think you can probably be exempt. But for IBKR, I think they if you are a company, you basically just pay the professional fees.
And you have any idea how much those were?
So it depends on the product you trade because
Okay.
IBKR, they just have tons of products you can trade. But if you only trade SPX, as for example, I think you probably pay 30 to $40
A month?
compared to a month and
Yeah,
compared
that's
to
what Tasty Trade wanted to charge me
Okay.
for an LLC data.
So it's I would say minimal
yeah.
It's it's
amount, but
But
Dave,
if you want to trade
it's about
ES,
125, 150 for professional traders. That's a data related fees. If the regular trader pays like $30 a month, and they will get like if you trade 30 contracts or more in a month, that gets wiped out. But not for professional traders. We'll be charged I think 150.
you said
The
150, is that 150 a month?
150 a month around that number, and
Okay.
the charge for SPX is also a little bit high,
Yep.
and we will not get uh, you know uh, if you trade through a company, we'll not get a preferential fill
Yep.
in the case of the trouble. So
So I would suggest that everybody kind of look at the full picture before you make any decision like this. No, so Adam asked a question, is it better to trade like in Dubai or Singapore where you have no capital gains tax? There are 9 U.S. states, including Florida, Washington, that have no capital gains tax. Um, there's no state tax in Texas. And I'll add also to that question, there's also some real tax benefits of trading in of you have to live in Puerto Rico. In
Mm.
Puerto
Uh,
Rico, you would only pay like island tax and not federal tax. Puerto Rico is a
so
protectorate.
so basically, if you do the same thing of what you're doing here, if you do this in Florida, you don't pay any capital gain tax. What does it
Well,
mean by
you
that?
you don't pay state capital gains taxes. I think that's what Adam's referring to.
Okay,
But
yeah,
just because you live in one of those states, you'll still be subject to normal federal
right,
capital gains taxes.
right.
All right. So, any other questions or comments? Leslie says, is there a minimum threshold of profits you recommend hitting before considering trading in a separate entity? And Leslie, I believe he answered that question previously. Maybe it was before you came in. He prefers another structure for making anything over. And I don't let me put words in your mouth, but you mentioned the $10,000 limit. Um,
Yeah, that's just I'm trying to say if you just testing the water, then it's fine. You don't need to have a separate entity. But once you're more serious about it and you want to take the tax deduction and everything, then I would suggest having a separate entity that's easier to do. And because everything from your kind of company trading will be in a separate tax form, and you can just manage separately. And that also shows that you're running the business actually.
I would also just caveat, this is from my own personal experience. You got to dial in, you don't have to, but I would dial in how much you enjoy filing paperwork and tax because you'll be filing twice. You'll be filing once for the corporation and once for your individual. So it could add to the amount of paperwork that you do. And if you hate that kind of activity, you're kind of comparing it against other, potential savings.
Yeah,
So
I
that,
totally
but
agree.
that's only true. That's only true for the S corp. For just a regular LLC, it's pretty simple. It's similar to just doing it yourself because
Right,
everything's
but
passed.
but there might be some state filing requirements for LLC uh, things, et cetera. So you're right, it might be minimal, but you just kind of dial in the amount of work required
Yeah.
versus what it kind of cost. I mean, let's take this for example. If I'm going to save under 5 grand a year, but it causes me a significant headache, I might just decide at some point in my life that I don't want that headache, right?
Yeah, I
Yeah. And
agree. Yeah.
oh, sorry. Go ahead.
Oh, I was going to say, yeah, so you also have to think about what Dale just said, because running a separate entity, it does take time and effort. And of course, if you make a lot more money, then you can hire someone to handle all the hassles for you. So that's another option. But so that's why I'm saying if you're not serious about it yet, you don't want to have a lot of commitment yet, then probably it's not a great idea. But you really think you want to run it as a business and grow it and so on, then yes, you can definitely
And
put more effort
and
to it.
Goldie, you did ask ChatGPT about the breakoff point where it believed it was worthwhile in New York City, and what was the number that you were told?
The question I asked ChatGPT, because I already formed an LLC for trading, but I did not declare an S corp. And I was trying to figure out whether I should. And ChatGPT told me for New York City, if I'm making under 191,000, that's my cutoff. Over 191,000, then do an S corp. Under, then I would be paying more taxes with the S corp than I would be saving. But
A-
New York is very peculiar in
And
taxing.
it taxes LLCs differently than it tax in New York City than it does,
Mhm.
the S corp. So
Mhm. Yeah,
I think
and
Right.
before you told it that you lived in New York City, I think it had a different answer, right?
It had 100,000 was the answer
Okay.
before I told it New York City. So it was
Well,
lower.
because ChatGPT considers you a poor person if you make less than 190,000 and live in New York City.
Yeah, exactly.
Yeah, and I would say for some states they actually tax at the S corp level. So in that case, you might want to think about that. But for my state, S corp doesn't add extra tax level, so that's fine. I'm fine with that. But I know that some states like Illinois, they also and New Hampshire, they also charge at the S corp level. So, but that's another thing
Yeah.
to think about. Yeah.
There's some tax breaks for living in Puerto Rico. I think you have to live there maybe 9 months or something like that, or there's a limit to how many days you have to live there.
It's 180 days still.
180 days. Okay.
180. I looked
That's
into it,
6 months.
but I think the upside is there, but the downside is also heavy actually. Meaning
Yeah.
that's what I thought of. Meaning, whatever the money that you make, you are going to save the state tax. Like maybe let's say 7%, right? Money. If you make 200,000, you're going to save like 14,000. But to make that 14,000, we have to live there 180 days and have a home. And
Yeah.
I felt, yeah, right, yes.
Yeah. Well, my wife refuses. She won't move with me to Puerto Rico, so that would be a downside too. All
We'd have
right.
to leave her here.
Hey, we don't. This is being recorded. All right. Other questions?
I have a comment addressing Leslie that if an LLC was not something you'd want to do, the first two steps would be, even as a sole proprietor, would be declaring TTS, which is not a declaration. It's just something you do when you file your taxes. Just pretend you're TTS, because we all are. We all trade too much. Um, and mark to market declaration. That is a declaration, and everyone here should be doing that on the equity side. And
I,
then
Okay, but then you have to designate yourself as a professional?
no, you're still a person. You're just a person that does this on your taxes.
you could still be
Oh, okay.
considered a non-professional by the broker, but you're classified as a TTS in terms of the IRS. One of the
If you
things I would suggest is if you not file, this is my own personal opinion, it may not be correct, there's my disclaimer, but I wouldn't file a C Corp or an S Corp if you have losses from prior years that you haven't washed through yet. I would just go ahead and file as a sole proprietor until I made enough money to uh, turn that loss into profit before I worried about it. But that's just my thoughts. Okay. Um, Other questions? And we'll say that we're going to close this up in 9 minutes. So, other questions?
I have a question about tax software. Does anyone here use any special tax software to double check their broker's statements at the end of the year? Like there's something called Trader's Log.
Mhm.
There's a couple things out there.
I don't. Adam says no software. I assume silence mean or no nothing in the chat means no.
No, because
Okay,
I basically trade only a few products that I know for sure what types they are. So that's yeah,
okay.
that's another way to avoid this issue. So
hmm
All right, anything else? All right, gang. Well, special thanks to Naijing for taking this Q&A. I think
my
this is
pleasure.
always good for us to, when we have pockets of knowledge to just to kind of huddle up and squeeze out any extra information. In fact, my dog's barking. I think he agrees.
hmm
All right, guys. Well, thanks, and we'll see everybody back on Trade Div.
All right,
Thank
see you
you guys.
guys. Thank you.